Welcome back to the deep dive. Today we're looking at, well, a really ambitious vision for a country that's already making major waves economically.
That's right. We're diving into India's future, specifically towards 2047, its 100th year of independence.
And our guide for this is a pretty hefty report from EY, isn't it? India at 100, realizing the potential of a $26 trillion economy.
Exactly. And it's worth noting, this wasn't just one or two people. They acknowledge a whole steering committee, macro experts, sector specialists. A lot of input went into this. Research, editorial, the whole 9 yards.
Okay, so quite comprehensive. Our mission then, today, is to really unpack what this report is saying. What are the key things, the drivers, that could get India to that $26 trillion mark?
And just as importantly, what are the roadblocks? The areas the report says, look, you really need to focus here to make that vision a reality.
Yeah, because the context is pretty interesting. India's already, what, the fifth largest economy?
And the fastest growing major one for, I think, 3 years running now.
Even with everything going on globally, high debt, inflation worries, trade slowing down, all those geopolitical tensions.
Precisely. So this isn't just an India story. Exploring how they might navigate this, the strategies involved, it offers insights for everyone watching the global economy shift. So let's dig in.
Okay, so the headline vision, a $26 trillion economy, fiscal year 2048. That number itself is staggering.
It is. It's a huge leap. The report lays out this most preferred scenario, S3, they call it, with milestones.
Right, like stepping stones.
Exactly. Crossing $5 trillion around FY 2028, then hitting $10 trillion by FY 2036.
Okay.
Then doubling again past $20 trillion by FY 2045, and finally landing near $25.8 trillion is the number in FY 2048.
But it's not just the big GDP number, is it? The report talks about per capita income, too. How does that translate for the average person?
That's key. It projects per capita income crossing $13,000 by FY 2045. And that figure is significant because, well, by World Bank definitions, that puts India into the developed economy bracket.
Right. And by 2048...
expected to reach $15,602. Think about what that means, though. A six-fold increase in per capita income by 2047.
6 times. For what, 1.7 billion people?
Over 1.7 billion, yeah. That kind of rise unleashes a, potentially unprecedented consumer boom. A huge shift in spending power.
So what kind of growth rate are we talking about to get there?
The report projects real GDP growth averaging between 6 and 6.4%. That's the average from FY23 all the way to FY48.
So consistently strong, even if it maybe slows a tiny bit over time.
Yeah, the decadal profile might moderate slightly, but it's still very robust growth over, 25 years.
And how does this stack up globally?
Well, the report mentions OECD projections. India's share of global GDP on a PPP basis, purchasing power parity,
Right.
is projected to go from about 8.9% now to 15.7% by FY 2048. That would make it the second largest economy after China.
Wow. And the report also touches on geopolitics, doesn't it? This India plus opportunity.
It does, yeah, in the foreword. It's this idea that as global companies look to diversify their supply chains, maybe reduce reliance on just one country like China, India has a chance to capture some of that shift. More investment, more manufacturing. So it's both internal momentum and these external factors potentially playing a role.
Okay, so that's the big picture. How does the report say India actually gets there? It mentions 8 growth drivers.
That's right. 8 key engines they see as foundational for this whole India at 100 vision. Especially critical during what they call the Amrit Kaal, that 25-year run-up to 2047.
Okay, let's break them down. Driver number 1, becoming the world's information technology and services hub.
Right. India's already strong here. Services exports were over $250 billion recently. IT and BPO are huge parts of that.
But it's changing, isn't it? Not just about cost anymore.
Exactly. The narrative is shifting from cost arbitrage to being a hub for high-quality talent for innovation.
The report mentions GCC's global capability centers, 1,500 of them.
Yeah, 1,500. That's like 45% of the global total. And these aren't just call centers anymore. They're involved in R&D, they're scaling up talent, driving efficiency. The report suggests this could position India as, like, the office of the world.
The office of the world.
Yeah.
So higher value stuff, too.
Definitely. Things like consulting, digital engineering, product development for Industry 4.0. There's talk of India becoming a platform and product powerhouse, too, generating its own B2B SaaS unicorns, maybe even hyperscalers.
But it needs to diversify beyond just IT.
That's a key point. They highlight potential in healthcare telemedicine, medical tourism, education tech, tourism, AV stuff like mobile gaming, even digital engineering for construction.
And using India's demographics to fill global needs, like those healthcare worker shortages mentioned.
Absolutely. Leveraging that huge young population to meet demand in places like the US, Germany, and things like free trade agreements, the India-UK one is mentioned, can help by making it easier for professionals to move.
Okay, driver 2. Digitalization, a force multiplier. This feels like it underpins a lot of the other drivers.
It really does. The scale is just immense. 1.2 billion telecom users, over 800 million on the internet, plus a real government push on digital platforms.
The India stack comes up a lot, Aadhaar, UPI.
Right. Aadhaar is the digital ID for over 1 billion people. It enables targeted subsidies, helps formalize the economy, and UPI, well, it's transformed payments. Largest in India, 5th globally by volume now. 350 banks, 260 million users. Instant, low-cost digital payments for almost everyone.
And the impact is huge, right? Formalization, financial inclusion, because you suddenly have a digital transaction trail.
Which can act like a credit history, yeah?
Yeah.
It's an alternative payment system, and it's a massive platform for innovation. Fintech, e-commerce, they're all building on it.
And there are newer platforms, too, ONDC.
OCEN.
Yeah, ONDC is fascinating. It's trying to create an open network for e-commerce so small businesses, local shops can compete online with the big guys. OCEN is about democratizing credit using digital cash flow data rather than just physical collateral to lend to individuals and MSMEs. Big potential for microlending there. And we're seeing these stacks planned for other sectors, health, education.
Exactly. Ayushman Bharat in health already aims for digital health records for everyone. Plans are there for agriculture, logistics, education. It's all about using that population scale, low-cost design philosophy.
Even government services are going digital, getting licenses, taxes, procurement through platforms like GEM.
GEM hit over $14 billion in gross merchandise value. And remember, the co-win platform during the pandemic for vaccines. Another example of leveraging this digital infrastructure at scale.
So it's having a real economic impact.
Oh yeah, the report quantifies it. The core digital economy share in GVA grew much faster than the overall economy between 2014 and 2019. Higher output multiplier supported over 60 million jobs back in 2019. It's a fundamental engine.
Okay, driver number 3, accelerated credit growth and the corporate bond market. India's credit to GDP ratio is comparatively low, the report says.
Yeah, domestic credit to the private sector, around 55% of GDP, lower than any peers.
And digitalization helps here too.
Critically, it tackles those old barriers, lack of credit history, difficulty assessing risk for small players. Cash flow-based lending, especially for MSMEs without much collateral, becomes possible. It helps with assessment, underwriting, even recovery.
And the opportunity size?
Massive. The mortgage market could potentially double in 5 years, maybe $600 billion. And the estimated credit gap for MSMEs is somewhere around $250, $300 billion. Digital tools are key to unlocking that.
But the corporate bond market is a weak spot.
It's highlighted as a challenge, yeah. Only about 16% of GDP, which is, well, suboptimal. It lacks depth, mostly just the highest-rated bonds trade.
Right.
Not much breadth for slightly riskier companies. And secondary market liquidity is low.
Why is developing that market so important for the bigger picture?
It's absolutely crucial for long-term funding. Think about infrastructure. The national infrastructure pipeline needs trillions. A deep bond market lets big companies raise large sums directly from investors for long periods.
Right, freeing up banks.
Exactly. Frees up bank capital for smaller borrowers, maybe shorter-term loans. It also lowers the cost of capital overall.
And private credit is stepping in a bit.
Yeah. Private non-bank credit is filling the gap, especially for mid-market firms that banks or the bond market don't serve well. It offers more flexible capital, often longer terms. And investors like the yields. Things like the Insolvency and Bankruptcy Code, the NCLT, provide a better framework for this by improving debt recovery prospects. The potential market size there is estimated around $500 billion.
Okay, driver 4. Thriving entrepreneurship spurred by private capital. India's startup scene has really exploded, hasn't it?
It really has. It's the third largest ecosystem globally now, after the US and China. It's not just tech anymore. Startups are across 56 different sectors. Healthcare, education are prominent.
And unicorns are popping up everywhere.
The growth is exponential. Went from maybe a year before 2017 to like 66% year-on-year growth recently. Over 100 unicorns now, valued at hundreds of billions.
Fueled by private money.
Heavily. PEVC investment hit record levels, $82 billion in FY22, I think. A big chunk, maybe 40%, went into startups. And crucially, there are successful exits happening, over $40 billion in exits in FY22. That shows value is actually being created and returned, which builds confidence.
So the ecosystem feels pretty established now.
Yeah, the report suggests it's well established, even with all the global economic uncertainty. It has momentum.
Driver 5, reaping the demographic dividend. We touched on this. India now the world's most populous country.
And the demographics look favorable, at least for a while. The working-age population share peaks around 2030 at nearly 69%, giving India a very low dependency ratio.
Meaning more workers per retiree or child.
Right. And India is projected to supply almost a quarter of the new workers entering the global workforce over the next decade.
Plus, it's a young population, median age around 28.
Yeah, much younger than the US or Europe. That's a competitive advantage. Fresh talent, yes, but also a driver for consumption, especially discretionary spending as incomes rise.
But the report flags challenges to actually reaping this dividend.
Definitely. Two big ones. Creating enough productive jobs for all these young people and improving the labor force participation rate, or LFPR.
Especially for women, right? That's been a concern.
Yes, female LFPR actually declined, which is worrying, though on the positive side, more women are enrolling in higher education, which could help turn that around eventually.
And moving people out of agriculture.
That's the other big structural challenge. You still have over 40% of the workforce in agriculture, but it only contributes maybe 18% to GVA. That points to a lot of underemployment.
But the raw talent pool is impressive. STEM graduates.
Huge. Over 2 million new STEM grads a year. And India leads the world in the percentage of women STEM grads, over 47%, plus a large healthcare workforce. So the potential talent pool is there for both domestic needs and global demand.
Okay, driver 6, domestic consumption boom. This has always been important for India's economy.
Absolutely. Consumption spending has often grown faster than overall GDP. Its share of GDP is already high, 55–60%.
And the future potential, tied to that per capita income growth,
is enormous. That projected 6x growth could just unleash spending like never before. A shift to more aspirational goods, services. The report suggests India could become the world's fastest-growing consumer market.
Are there signs this is already starting? Consumer credit.
Yes, the report points to bank data. Personal loans doubled between 2016–22, credit card spending tripled, vehicle and home loans way up, people are borrowing more to consume.
And financial inclusion helps make that possible.
Critically, and again, the digital infrastructure of the India stack is seen as a key structural change here. It makes it easier for lenders to assess risk and give credit to millions more people, which directly fuels consumption.
Driver 7, making domestic manufacturing competitive. This is crucial for jobs, right? Absorbing that labor from farms.
Yes, absolutely. And for serving both the huge domestic market and exporting. But manufacturing's share of the economy has been kind of stuck, around 16% of GVA.
So policy's trying to push this. Tax rates, GST.
Yeah, competitive corporate tax rates for new manufacturers, the simplified GST, which helps logistics and removes cascading taxes, and the Atmanirbhar Bharat, or self-reliance push.
Which gained traction after COVID supply chain issues.
Exactly. Reducing import dependence, building resilience. And the PLI scheme, production-linked incentives, seems central to this.
That's the one covering 14 sectors, offering money for hitting production targets.
Right. Huge investment commitments already attracted, around $30 billion. The goals are clear.
Yeah.
Build scale, substitute imports, but also boost exports, and create jobs. It targets key future sectors, semiconductors, EVs, solar, green hydrogen, drones. The potential impact is massive, maybe adding over $500 billion in manufacturing value.
And other supporting policies? Green power, labor laws?
Facilitating green power access, tweaking the MSME definition so they can grow bigger, ongoing work to simplify labor laws, the national logistics policy aiming to cut transport costs. It's a broad effort.
Any success stories mentioned?
Yeah, the rapid scale-up of COVID vaccine production, high quality, low cost, supplying the world. And mobile phone manufacturing, India is now the second largest globally, and exports jumped significantly after PLI started for that sector.
The report also mentions India's rising economic complexity.
It does. Its ranking improved, and it ranks first in a complexity outlook index, suggesting it has the potential to move into producing more sophisticated things like robots, drones, semiconductor R&D, AI, IoT components.
Okay, last driver, number 8. Building the infrastructure of the future.
Foundational stuff. Good infrastructure cuts costs, makes everything more competitive, creates jobs, drives demand for things like steel and cement.
And government spending is up here.
Significantly. CapEx as a share of GDP has risen, And a lot is going into infrastructure. Why? Because it has a really high multiplier effect on jobs, maybe 5 or 6 times the average sector. Think about highway construction, double the annual pace since 2014-15.
What are the big initiatives? NIP, Gati Shakti.
The National Infrastructure Pipeline, NIP, was that huge $1.4 trillion plan, though it needs updating. Gati Shakti is interesting. It's a digital platform trying to integrate planning across 16 different ministries.
To avoid silos, ensure coordination.
Exactly. Break down those barriers for smoother, faster execution over the next 25 years. It pulls together existing schemes, too, like Faratmala for roads, Sagarmala for ports.
And the national logistics policy fits here, too, aiming for 8% logistics costs.
Yes, down from maybe 14–18% now. A huge saving if achieved. And the dedicated freight corridors, the DFCs, are nearing completion.
Those are the separate rail lines just for goods.
Right. They should massively increase freight capacity, take pressure off roads and existing passenger tracks, which in turn allows for faster passenger trains like the Vande Bharat. Big efficiency gains expected.
How is all this getting paid for?
Well, attracting private capital is key. The report mentions tax incentives for sovereign wealth and pension funds, using vehicles like infrastructure investment trusts, INVTs, to monetize existing assets and recycle capital. There's also the national monetization pipeline.
But success hinges on execution and getting private money in.
Absolutely. That's the challenge. But continued infrastructure development is seen as vital for jobs, competitiveness, and supporting trade growth.
Now, woven through all of this is the energy transition, isn't it? It's not listed as a separate driver, but it feels critical.
It's absolutely critical, yeah.
Yeah.
The report treats it as a core enabler. Climate change is both a massive risk and potentially a huge economic opportunity.
And competitiveness is linked now, carbon pricing.
Right. Businesses increasingly need emission-free energy to stay competitive globally. India is already the third largest renewable energy producer. About 40% of installed capacity is non-fossil now.
And the target is 500 gigawatt by 2030.
500 gigawatt non-fossil by 2030, yeah? With renewables like solar and wind making up about 80% of new capacity additions, policy has driven huge growth in renewables already.
The green hydrogen mission sounds ambitious.
Very. Big incentives, targets for 5 million tons of annual capacity, 60 GW of electrolyzers by 2030, needing 125 GW of associated renewable power.
Wow. The goal is 10% of global hydrogen demand.
That's the aim. It helps energy independence too, cutting reliance on imported hydrocarbons. Significant private and state investment is already committed.
Energy storage is crucial for renewables, right?
Essential for grid stability with intermittent sources like solar. India is expected to be the third largest storage market by 2040. Huge investment opportunity there, maybe $50 billion. Policies are driving demand.
And the PLI schemes support this green shift too. Batteries, solar panels.
Yes, PLI for solar modules, for advanced batteries, ACC, plus the FAME scheme boosting EVs, and support for green hydrogen equipment. Domestic battery manufacturing at gigascale is starting.
Can India make green hydrogen competitive? Costs are high now.
Costs need to come down, definitely. From maybe $4 to $7 per kilo now to $1 to compete with fossil fuels. But the report argues India has advantages. Potentially very low-cost renewable power, innovation, scale, policy support. It can become a low-cost producer.
And the benefits.
Driving decarbonization domestically, making exports competitive by avoiding carbon taxes, potential new export markets for green products and tech, plus manufacturing opportunities for the equipment itself.
Okay, so that covers the vision, the milestones, the 8 growth drivers, and that crucial energy transition theme. But the report is clear this isn't guaranteed. Part 3 gets into the areas needing serious attention, the potential spoilers.
Right, this is the what needs fixing part, to really accelerate growth and make it sustainable. First up, enhancing ease of doing business.
Seems fundamental. If it's hard to do business, investment slows down. What are the main issues flagged?
Contract enforcement is a big one. The report cites data showing it takes, on average, almost 1,450 days, that's nearly 4 years, to resolve a commercial dispute. That's a massive drag.
4 years. Wow. Okay, what else?
Paying taxes. Progress has been made, rates are lower, technology helps. But businesses still face uncertainty, sometimes aggressive interpretations of rules, delays in resolving disputes, even through alternative methods.
And decriminalizing economic laws.
Yeah, the issue of having criminal penalties for relatively minor business compliance failures. It creates uncertainty, makes managers hesitant, and carries risks of harassment. The government is looking at it, but the report implies it needs to move faster, which is complex because you have to review so many laws.
Okay, next area. Prudent macroeconomic management. Basically, keeping the government's finances healthy.
Exactly. Sustainable deficits are key for stability. The report notes the combined government revenue account day-to-day spending versus income has often been in deficit, and it spiked during the pandemic.
And debt levels rose, too.
Significantly. The combined debt-to-GDP ratio went well beyond the target level, which was around 60%. Bringing that back down is crucial for having fiscal space later.
So the report suggests a golden rule, only borrow for investment.
Pretty much. Balance the day-to-day budget, run a sustainable overall fiscal deficit, maybe 6% of GDP, and use borrowing primarily for capital expenditure infrastructure, education, health things that boost long-term capacity. Shift away from short-term subsidies towards things that create jobs and improve welfare sustainably.
And boosting savings and investment, attracting global capital.
Both are vital. While global capital is important, the report stresses that most investment in India is financed by domestic savings, so boosting those rates is paramount.
Then there's prioritizing education and health, critical for the demographic dividend.
Absolutely. You need an educated, skilled, healthy workforce. But the report points out government spending here has been low as a share of GDP, around 3.1% for education, only 1.4% for health recently.
That needs to go up significantly.
Yes. Health spending got a boost during COVID, and that seems likely to continue with investments in medical colleges and hospitals. But education, well, despite the high number of STEM grads, there are weaknesses.
Like global rankings of universities, issues in schools.
Right. Rankings aren't always great, and schools face challenges like student-teacher ratios, teacher contracts. The National Education Policy 2020 is seen as a good reform plan, but implementation is key. And since education involves both central and state governments, coordination is vital.
What about R&D investment?
Another area needing a big push. India's R&D spending is low, about 0.7% of GDP, compared to a global average closer to 2.2%. And the government funds the majority of it, over 55%.
So need more private sector R&D.
Definitely. Need to encourage private companies to invest much more in R&D to boost the overall level and drive innovation.
Power sector reforms are also flagged. Reliable electricity is basic.
It is. The core problem is the financial health of the distribution companies, the discoms. Many run at a loss, which means they delay payments to power generators.
Which discourages investment in new generation and grid improvement.
Exactly. It creates a vicious cycle. The sector needs reform to become financially sustainable, able to attract investment without relying on subsidies, especially with the shift towards renewables.
And energy independence, a long-term goal.
A very long-term challenge, yes. Reducing reliance on imported oil and gas, but also now critical minerals needed for green tech like lithium, rare earths. Policies are there, incentives for domestic exploration, renewables, green hydrogen, but it takes time and huge investment. Access to those critical minerals is a potential vulnerability to watch.
Finally, the urbanization paradigm. India's cities are growing rapidly.
Immensely. Second largest urban system globally. Cities already drive about 60% of GDP. By 2046, over half the population could be urban. It's pivotal for growth.
But managing that growth is the challenge.
Huge challenge. The report says India needs its own model for urbanization, learning from others but adapting. It requires massive investment in urban infrastructure. Transport, housing, water, waste, green spaces, and planning needs to be integrated.
NTI Ayog recommendations are mentioned. Integrative planning, land use.
Yes. Integrated economic vision, better policies and regulations, linking land use with infrastructure planning, addressing land supply and affordable housing. A high-level committee is apparently working on reforms.
But it comes down to local government capacity.
That's key. Equipping the urban local bodies, the cities themselves, with the financial resources, the planning tools, and the capacity to manage this growth sustainably and inclusively. That's a major task.
Wow. Okay. That really was a deep dive. We've covered the huge potential, at $26 trillion vision, the drivers like tech, demographics, manufacturing, infrastructure, consumption.
And that crucial energy transition woven through it all.
Yeah.
But also, crucially, those areas needing real focus. The ease of doing business, macro stability, education, health, R&D, energy reforms, urbanization. It's a long list.
It really underscores that the path is there, the report lays out a credible route, but getting there depends entirely on, well, on execution, on tackling these sometimes quite difficult challenges head on.
Exactly. It's not inevitable. The potential is there. But unlocking it requires sustained strategic effort across all these fronts. It's about building on the strengths while systematically fixing the weaknesses.
So for you, listening to all this, the incredible opportunities, but also these significant hurdles, Which area do you think presents the single biggest challenge for India to overcome on this journey to 2047? And maybe, why does that particular challenge seem so tough to crack? Something to think about.